Hey everyone, exciting show for you today. It is Wednesday, and yes, Wednesday is Anna Kelly Day. How you doing, Anna?
I'm great. So glad to be back with you, Michael.
Yes, you have a following on this channel. I must have got 10 or 15 kind of comments or texts from folks going, where is she? Where is she? Are you guys fighting? I'm like, no, man, she's on a vacation. Give her a break. So why don't you just tell people where you've been the last 3 weeks?
Great. First of all, we never fight. Michael's like the easiest get along guy ever. So I always enjoy our talks. I look forward to this time every week when we can
Oh,
share and give value to other people. So that's
cool.
not going to happen. But I just needed a few weeks to just relax with our family, with everything that's been going on with COVID. While some people, it's more downtime, for us, it's like more uptime because we're having to manage all our properties and make
Mhm.
sure that we're wisely navigating everything.
Yeah.
And my kids have been off and kind of at home and stir crazy. So we decided, let's go to the beach a couple weeks. We had some unrented weeks at our beach house. And so
Yeah.
we went to the beach a couple weeks, and then we decided to drive to Texas to visit my family. So we were on the road and away with family for almost 2 weeks, and
Wow.
just now kind of getting back and getting back into things. So it was a nice time with my family, some well needed downtime. And now I'm raring to go.
Yeah. Need a vacation from your vacation, as some people say, right?
Yes.
Well, that's good. Again, we got to remember why we do this, right? Both of us worked very, very hard, sacrificed for a long time so that we can have the freedom to spontaneously make decisions like that. So
Exactly. Exactly.
I'm very happy for you to get some time away at the beach and then go see mom and dad in Texas. That's awesome. So I'm very, very happy for you.
Thank you.
Um, let's talk about the deal, right? Last time we spoke, you were still, I think, working on getting the financing, and you had your fingers crossed on that big beachfront house. Where's that at?
Yes, so we're making progress, Michael. We were supposed to close actually while I was in Texas and did all of the remote docs and everything. And the lender of the second mortgage, because I'm doing a first and a concurrent second, a HELOC,
Yep.
at the same time to be able to buy it with 10% down. The
Yep.
second said, we are just too slammed. We're too busy. We can't get it done. We need another 2 weeks. So we
Okay.
didn't close yet. We're supposed to close next week. And hopefully next week I'll be doing this from my new beach house.
Oh, I look forward to
Um,
that. That'll be fun.
so I'm just waiting on them to give me the final approval and the go ahead, but we're notching closer. I've
How
got approval on the
excited
first and waiting on the second.
How excited is your husband and your kids? Because if I remember our conversation 4 or 5 weeks ago, you were looking at the numbers going, and they were like, no, we're doing this.
Yes. The numbers are good because I'm buying it at about 150,000 below market.
Yep.
So that's giving me that cushion to say, even if we don't make quite what we think, I'm getting a great deal and I could sell it and still profit. But
Yep.
I'm not buying it really for the profit. I'm buying it for the enjoyment for our family.
Yeah.
So, they're super excited. It faces the water. And with a family of 6, my kids are staggered ages. So they're always like, we don't want to go to the beach by ourselves. We want our cousins to come and our friends to come. Can't we invite, Tommy and Sammy and Sally? And so, we had a 5-bedroom, but with 4 kids, that gives room for one other, couple. So having a 6-bedroom house with sleepers, they are so excited to start inviting all their cousins and their friends. And it'll make their time at the beach even more fun because they can have other people there. So they are thrilled, and I'm really thrilled. There's
Yeah.
parts of me that go, is this the time to buy a third beach house, a high-end beach house? There might be some pain for a year or so, but I look at every investment long term, and this
Yeah.
is an investment in my family that's going to help pay for itself, and over the long term, it's going to do really well. So I'm getting more and more excited about it as we get
Oh, you
close.
should be extremely excited. I mean, I can already sort of close my eyes and see your future, right? You could potentially have weddings there or receptions, and right,
Yeah,
you can have your grandkids over for Christmases and summers. I mean, it's going to be
absolutely.
so much fun.
It
So much
is.
fun.
And now I have 2 in the same place right around the corner. So we
Ah,
can really bring huge numbers of families, if we want to do it. So
yeah.
it's exciting. It's
Oh,
exciting.
family vacations at Anna's house. There you go. That's going to be
That's
awesome.
yeah.
Very cool.
And that's what I love about real estate, Michael, is it allows you to do that. And so even though this one isn't like the slam dunk income generating property, this is the property that's going to have growth. It's going to have that preservation of the asset, and it's going to buy family enjoyment. And
Mhm.
I can do that because I have other assets where I bought them strictly for the income. So if
Right.
the income on this one flounders a little bit, it's okay because I've got a lot of income coming in from the other ones. So
Yeah.
real estate is so malleable, and you can buy so many different types of deals that fit within your different buckets of what you want to do. So
Yeah.
this is like my enjoyment and preservation bucket.
Oh, I'm so happy for you. I remember talking to you the day you retired, and just thinking about what was possible. I had never thought about this, but just look what happens. I think it's just been over a year, right? Didn't you just celebrate over a year?
It's been a year and 2 months and 4 days.
Not that I'm counting or anything. That is awesome.
It's been amazing.
Very, very cool. Well, hey, let's catch up, because it's been 3 weeks. The world never stops in real estate investing. Lots of stuff going on. Why don't we just jump into what I saw Joe Biden put out yesterday, right? He wants to spend, I think it was $750 billion. I forget what he called it, family first or something like that. But basically, he's going to attack a couple of big real estate investing, I don't want to call them loopholes, but basically things in the IRS tax code. Do you see that?
Right. The things that incentivize us to keep buying more real estate in order to stimulate the economy. He wants to take them away.
Yeah, so there's really two.
Stimulate the economy.
Yeah, so there's two in there. I want to treat them separately, because I think they're both important to talk about and shouldn't be talked. Let's talk about the 1031 exchange first. First thing I want to point out is that's something that has been talked about by past presidents, including Trump in 2016. So, nobody actually thought he would do it, given he's a real estate guy, but it has been talked about. But now we have a big tax bill. We just just loaded up on $3 trillion in, stimulus or whatever. I think it's a good chance that it could happen. So when you look at that, what was your kind of first reaction?
My first reaction was I wasn't surprised.
Mm-hmm.
I wasn't surprised because typically the difference financially in Republicans and Democrats is that
Mm-hmm.
Republicans want to cut taxes for business owners, for real estate investors, et cetera, to stimulate them continuing to spend and to hire and then build up communities and raise taxes that way by getting people that make more money, getting more people, invested in real estate, et cetera. On the Democrat side, they say, let's tax everybody we can that has any kind of money,
Mm-hmm.
and let's remove all the deductions we can from any businesses, corporations, real estate investors, et cetera, so that we can create more socialized types programs and give more to the people that don't have by taxing those that do. Mm-hmm. So it's just a fundamental difference in how they view the economy and growth and wealth distribution and equality. Mm-hmm. And so this is just kind of more par for the course with his leanings. And his leanings are definitely more far left than even your average Democrat at this point. And so he's pushing more for the type of socialist types programs that Bernie Sanders was. And in order to give all these free benefits and things that he wants to, he's like, let's tax everything we can where we're not getting that tax revenue now. Mm-hmm. And 1031 exchanges could be, millions and hundreds of millions of dollars in tax benefit by starting to tax us on those exchanges.
Yeah, so I actually thought about this a couple of times. So first off, let's just be clear. I used the 1031 exchange to substantially grow my portfolio back in 06, 07. So I've used it to great benefit. I was trying to think, what would I do now, right? Let's just assume it was gone. Assume I have an asset that I've owned for a while. The cost basis or depreciation is, most of it's gone. What would I do? I mean, because really what the 1031 exchange allows you to do is do a like-kind exchange and go bigger. That's what the 1031 exchange does. It tells me and incents me to go bigger.
Yes.
If I lose that, I honestly don't know if I go bigger. And that was my first thought. I didn't know if I was being short-sighted or not. But when you look at it and you were thinking about going bigger, obviously the 1031 exchange helps. Do you not think about going bigger next time? I just don't know. Am I being short-sighted?
I don't think you're being short-sighted, but I think that you have to realize that your return on that property is going to be significantly less, for one, because you're going to have to factor in, a gain and a tax on the gain. Mm-hmm. The other thing that makes it challenging to go bigger is that not only will you now be taxed on it, but the Democrats typically want to increase the capital gain rate too. Yeah. So now you might not only be taxed on the exchange that you could have deferred that tax for years later, mm-hmm. to have to pay it now and at higher capital gains rates, most likely, mm-hmm. than what we're seeing today. So it's kind of a double whammy. Even though it's not in black and white, we have to think through that as what comes. it's kind of a double whammy. And then to give yourself the triple whammy is they're talking about probably removing the bonus depreciation. So that's already been on the table, where we've got this bonus depreciation that incentivizes us to buy something big, because it really only makes sense if it's $1 million or more.
Yep.
And then you can write off and accelerate that depreciation to have a big tax benefit. So for people that didn't do a 1031 exchange, even if they had to pay the tax today, you're paying at a lower capital gains rate, and then you can buy something bigger and take the bonus depreciation to offset your capital gain. Right. So the current tax code gives you a lot of options that incentivizes you to go bigger, where if they take away the bonus depreciation and they take away, the 1031 exchange and raise capital gains taxes, you remove significant incentives for people to buy big real estate.
Yeah, and it's that's exactly what I'm thinking. Is it just doesn't make sense to go bigger. If you're going to go bigger, it'll be in much smaller leaps, right? Because again, if you buy something, just pick numbers, right? You buy it for 500, a decade or 15 years later, it's worth 1.5. I'm just making stuff up now.
Sure.
Right. A couple of things have happened. First off, you depreciated that 500. So your cost basis is probably 250, 280, something like that.
Sure.
So now you say, let's say we sell it for 250, or it's worth 250 on the books, because you got depreciation recapture. You sell it at 1.5, removing transaction costs. You have 1.25 in gains. Capital gains rate goes to 25%. You have the state, because I'm in California. I mean, Jesus, I'm losing 35%.
Right.
That's significant.
$300,000. It's a lot. And so before, for those that haven't done a 1031, is you could exchange that, whatever the value is that you sell that property for, you could roll that whole value into something else that you buy for the same dollar amount or bigger.
Yeah, $1 more. Yeah.
Essentially going to pay the government their taxes, but you defer it further and further and further, where the value of that dollar down the road is probably less. And you hope that as you get older and you're making less active income, your tax bracket's lower, your capital gain bracket is lower. So it just incentivizes you every time you're done with a property to continue to invest back in the economy and buy more. And now, a lot of people already won't sell because they don't want to pay the current capital gain.
Yeah.
And they don't have anything to 1031 exchange into. Yeah. So those are the kind of deals where the seller will, might be interested in seller financing. Yeah. So I think we have to strategize and say, if these things go away, are there other ways that we can take down deals, take advantage of the fact that other people aren't going to get their tax benefits, and maybe start buying some things, creatively, and to hold them longer. Yeah. So the other thing, and I know this is a lot, but I just, another thing off the top of my mind is, right now, if you die, you give it to your children with a stepped-up basis.
That was another topic. Yes.
Next question is going to be, are they going to take that stepped-up basis away? And I've seen rumblings of some of the Democrats pushing for that. Yeah. And that's a huge disincentive if they take that away, because while the idea is eventually I'm going to pay the tax, if I die and my kids inherit it, they get that new basis of whatever it was worth when they got it. And you essentially can defer taxation on the growth of the value of a property forever, which is the beauty of real estate. So take all of those benefits away. And then you've got to ask yourself, Michael, if I look at my returns on a tax adjusted basis, not just my cash on cash annual tax outlay, but my total outlay on the back end when I sell, can I still generate a profit that's a high enough return on my dollar investing in real estate that makes it worth the time commitment and the risks and the headaches of investing in real estate? And for a lot of big deals, the answer is going to be no. Yeah. So for smaller deals, if I can buy a smaller deal, mom and pop get a great deal on, a great deal on the buy, then I can just plan to hold properties a really long time, keep putting money back into fixing those properties up and keeping them at current, the then current level of improvement, rather than selling and doing something else. But on big properties where they already sell at a premium, the reason so many big properties right now, like A and B properties, sell at like a 4.5 or 5 cap, where essentially the investors are willing to make 4 to 5, 6% return on their money, is because they get that bonus depreciation and they get the 1031. So even though their cash on cash might be 5, they know, hey, I've got some upside. I can 1031 and I might get a bonus depreciation equal to like 3/4 of what I'm investing. So that's kind of a return on their investment because they're saving, you know, 1/3 of that in their taxes. So if someone's going to make 4 or 5% and not get the depreciation and have to pay on that, their return's like 2.5 to 3. Well, why would someone invest with the headache of major multifamily for 2.5 to 3%? I think they don't.
Oh, no, there's
So
no question.
it could drive values down for
Yeah.
sure.
Yeah. And again, I want to go back to the math on that 11031 before we put that to bed, because really what that means to me is I lose $300,000 again, right? It's now in the books at 250. I sell for 1.5. I lose 300 grand in taxes. I can't buy as much, right? That 300 grand is, you know, at 30% down is an extra $1 million or at least 900 grand. So
Yeah. And at 20% down, you know, you could be buying a $1.5 million property for the tax sake.
Just for the tax.
Right. Just for the tax. You lose the ability to buy, you know, 5 times that in rental property that could generate you annually the amount you're paying in tax once.
And oh, by the way, again, let's not forget landlords help people, right? We are a service to the tenants. I don't know. It's a silly idea. But although for the first time, I think it actually could go away. There's so much, we're writing such big checks. There's a left leaning, it seems like we're going that direction. You got to tax the rich. Then the stepped up bases we had to talk about. Again, I thought about that all last week because I'm in a situation where all our stuff will roll to our daughter, right? And she wants nothing to do with this. So I'm like, well, in the past, we would have probably cleaned up our portfolio by a half as we got older. But now, you know, gun to head, we probably sell everything or do owner financing. So she has zero headaches, right? Because we will take the tax hits for having her do it. I mean, there's just lots of decisions, right, to be made.
There are. And that's one of the reasons that when you buy a deal, I think we can't miss this, is there's always unknown risk. And in our era, just this year, we've talked about this before, but we have this new era of legislative risk that's aggressively changing. And so every time we buy real estate, you've got to make money on the buy. You have to, because you just don't know what's going to happen in the future on the sell. And so I think that these kinds of changes make us say, if I'm buying deals, I don't want to pay retail and hope for appreciation or hope for the big growth on the back end. I really need to get a really good deal up front. I need to cash flow really well on these properties while I own them. And then on the back end, if I don't make as much as I hoped because the tax code changed or I can't 1031, at least I've made good money on the front end and while I've held the asset. Where I think a lot of investors right now are so value add based that they just think I'm just going to, you know, come in and make a huge chunk on the back end, that investors that put together some of these bigger deals don't make hardly any money on the front end and make very little money during the cash flow because they're paying all of their investors. And then on the back end, you know, now it's like, oh, what's really going to happen and what's the tax model going to look like? So it's a big deal. And I think, as you said, some of the politicians seem to be getting further and further left. And as I've shared in some of the documents, you know, with the World Economic Forum, with the United Nations calling for this great global reset and the end to capitalism, the whole world is trying to move toward more socialistic, fair policies where they tax the wealthy and they bring the poor up to a minimum wage, you know, $40,000, $50,000, $60,000 a year. So we know that the world is kind of moving in that direction where there's going to be less and less benefits for business owners and landlords, property owners, because they're trying to do everything they can to provide equality, wealth equality. And I think some of that happens by removing business incentives and removing taxation does disincentivize businesses and landlords to keep buying property. It brings our wealth down and then it brings, you know, the wealth of our tenants up. And so again, you know, if you think that that's a good thing to do, well, then you'll be happy with these things. If you don't, then you won't be. But I think we have to realize that if the world is going that way and the Democrats win the election, there's going to be a lot more pain ahead for landlords and small businesses. And we've really got to think about, you know, how we diversify our holdings and what we do to minimize some of that legislative risk while we can.
Yeah. And the other thing, I think that's all very valid and stuff that I've been thinking about that, January, I wasn't thinking about, frankly.
Right.
Right. It's just, and frankly, the last 20 years, I wasn't thinking about it. It wasn't even a part of my consideration. I thought about taxes like once a year, right? Like right around March 15th as I got ready for April 15th.
Yeah.
But the other thing that I think is going on is we are seeing an exodus from vertical cities, especially in California and New York, which also happen to be Democratic run. And now we have them, specifically San Francisco and New York, attacking the rich. And I just saw this the other day where New York is looking at doing a billionaire's tax, right? If you reside in New York, we're going to tax you if you're a billionaire at some number, which, oh, by the way, how do you evaluate being a billionaire, asset prices and all of that? Regardless, it's the stupidest thing I've ever heard, because what happens if you're a billionaire and your primary residence is New York and this happens? Well, you change it to one of your other 17 houses and suddenly you're not in New York. Anytime there's a city that does that, or a state even, you're just opening the door and you're asking the rich to leave instead of stay here, bring jobs here. There was a gentleman, I forget his name, I wish I remembered, but he was in New Jersey, and New Jersey did something like this, and he just changed his home address to Florida. And New Jersey had to go do a budget shortfall because one guy left. Right? I mean, why?
And we're seeing that now.
Yeah.
We're seeing that now. People are leaving New York and New Jersey and Connecticut and Massachusetts and California.
Yeah.
And they're going to Georgia and Texas and South Carolina and Florida.
And Nevada, of all places. Yeah.
Yeah. Where there's less real estate taxes, there's less income taxes, and there's more conservative legislators.
Yeah.
But what's interesting, Michael, is they're moving to those states because of these more liberal taxation policies, but then they're still voting in the same people that are going to do the same thing in the conservative states. So, I think the question is, and my husband and I, I'm going to be real open and honest with everything happening in Pennsylvania and everything happening with COVID. Our governor has been really brutal with businesses. And, it's in Pennsylvania, like our big box stores, for example, are open, but all of the small home supply stores are closed. Stupid. So it's like doing the same thing, the same businesses. We were the only state that could not buy and sell real estate during all of COVID, even though nationally they could. And so our governor's level of control of businesses and shutdowns and multiple shutdowns has made us say, do we really want to be in this state as real estate investors and as business owners if things get worse and if the election goes to the left?
Yeah.
So my husband and I, on our way down to Texas, said, let's look up what are the most conservative states that have conservative political policies and taxation. Mm-hmm. Where can we buy land fairly inexpensive? Where are state income taxes low? Mm-hmm. And we looked at about 4 states that we said we might be willing to move there if things change.
Care to share that list? Sorry.
Sure. And I'll try to send a link to you after this, Michael, that has a link of some things that I looked up. But in the ones that have a good balance of conservative and low real estate taxes and low personal income taxes were Georgia, South Carolina, Florida, and Texas. Now, Texas has higher real estate taxes than a lot of states, but they have no state income tax. And as real estate investors, if the tax deductions go away, I don't want to be taxed a ton on my income. So I'd rather pay a little more real estate taxes that the tenants are paying anyway, basically, through the rent that I'm charging. Yeah. So those are the states that I'm really looking at. Alabama was another one, but just a state that I don't know anything about and I don't think I'd want to live in. Mm-hmm. And so those are the main states that we're starting to look at and say, I already own in Atlanta, and I've been looking at the Carolinas for a while. So now I'm basically saying, let me look at maybe starting to step up my market analysis and learning about those markets to start investing there. Yeah. And again, if federally things change and, we start getting really big tax changes, tax code changes like what Biden's pushing, some of these things are just going to buy us time. Yeah. Eventually it's all going to even out potentially.
Well,
But I think you have to think about those things.
Yeah, there's certainly a big difference between state and federal, right? When something comes at
Yeah.
the federal level, you really can't escape it all
Right.
that well, right?
Yeah.
But yeah, there are certainly going to be winners and losers statewide. I happen to live in one state that's going to lose, and our governor is an idiot, doesn't see it coming. I mean, the bet is made. California
Yeah.
is toast for the decade, right?
Right.
The door is open, and we have all these millionaires leaving and high-income folks leaving for Texas, and they're actually going to Nevada. It's one of the things that shocks me is they're going to Nevada. But yeah, it's going to happen, and New York and California won't be the same for the decade, and we're going to wonder what happened to the deficit. It's like, and then taxes are going to go up, and then it's going to make more people leave. It's going to be like, oh my God.
And that's what's it's so hard for me to see how some people can't see it.
Yeah.
And again, I'm conservative, but I'm fairly moderate. Like, I believe in certain social programs that maybe the far right wouldn't. And so I think that there's a place for certain programs. And of course you've got to tax in order to get it.
Totally
but
agree.
I don't understand how, when you see that you tax the rich, that they start to move, that the only people left in your state can't afford to pay the tax bills, that they then have to raise taxes. You can see that there's no alternative option. So it shocks me that so many big cities that have been bleeding for years, honestly, are now going to have all these people laid off with COVID and companies shutting down and even further reduce their tax base. They're just not going to have a way to cover it. And so I have a close family member who's on the economic committee for Pennsylvania. So she goes and she works with municipalities who are basically on the verge of bankruptcy to figure out, how do we balance the budget and how do we not go under? And most cities in Pennsylvania have been in that, at that risk. And I know nationally, in talking to her, throughout the country, a lot of the big cities are bleeding. So they're going into huge debt, just like the federal, our government is at the federal level. And the only way out of it is to, in my opinion, is to incentivize more development, higher GDP, more employees. And so you give the benefits to those that are providing housing and providing businesses, so that people move in your state, get better jobs, and you raise the tax base that way.
Yeah.
So it's surprising to me that I haven't seen big cities that are more liberal start to realize that and reverse course.
Yeah, no, they're taking their last swing at tax the rich, more services to help the needy. Again, I'm a huge supporter of Section 8. I grew up with nothing. I'm a huge housing. I mean, I get it, but when you start taking property away or threatening it, I mean, it's such a dangerous curve that California is on. And I've been here 50 years, and for the first time thinking, you know what, maybe this is not where I want to live. I never thought I would say that.
It's hard. It's hard when you love a place and you have roots, but I think you have to think. You got to think about that. Not only do you think, where do I want to invest and how do I diversify my investments so that they're not all in one state? Because that's important too. Yeah. But then where do I need to live based on how I'm going to be taxed? And, both of those things I think we're having to think more about now because of the rapid escalation of legislative shift that we're seeing. And I can tell you pretty certainly, despite some of my family's chagrins, if the election goes to the Democrats, I most likely will relocate out of Pennsylvania, at least for my primary residence. I'll still invest here, some, but we're going to move south.
Yeah, I think that this has been a lot of fun. I love catching up with you every week. Good luck on closing that home next week, and I look forward to doing our next show from there.
Thank you so much. I look forward to it too.
All right. Have a wonderful day.
You too.
Thanks.